The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 22nd, wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a terrific Tuesday. Let's make sure that we do everything we can to have a wonderful Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you learn to accept that, when you learn to embrace that, it's a beautiful thing, because it means you can find the gift in every set of circumstance that life is going to provide to you. That's really the role of life. Of course, the role of the universe. We know the role of the universe that you and I take a look at each day is, what are the markets doing? What are the markets throwing at us? And can we go find the gifts? Kind of like you and I were Lewis and Clark, or maybe, we're some kind of, how about Harrison Ford and Raiders of the Lost Ark? We could be that character. Maybe we could be the character, who was it that in National Treasure? What's Nicolas Cage? Who did he play out there? Or maybe it was Tom Hanks in the Da Vinci Code, right? This is all about being able to find clues out there. And that's really what goes on a continuous basis in each of our lives, whether it's these markets or any place else out there. Now, the most important thing that I want you to understand is I'm absolutely grateful for your presence here. I'm honored by your presence. I'm here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can call in at 727-445-1044. That way, you and we can go both look at a stock chart. You may have been looking at a chart for a much longer period of time than I am. Yeah, I might pull something up on my screen, and I've got about a 5-second, 10-second, 15-second view. My eyes are immediately looking in on a pattern, but maybe you see something different out there. So if you do, come on, call on in, share that with the audience, especially on this wonderful Wednesday. Hey, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got Dow futures. They're trading up 32 points right now, trading out at 17,914. Pretty big turnaround from the low. We'll take a look at that. It's already up about 130 points or so, I think, off of the bottom this morning. Something to think about. S&P futures, they're up almost 4 points right now, trading out at 2,094. NASDAQ futures up 12. Big bounce in the NASDAQ futures off of the lows over the course of the last 5 hours. We'll take a look at that. Goldilocks back $6 right now, trading at 1196.70. Silver back 9 pennies at 15.91. Light sweet crude up 12 cents. She's trading at 56.73. A quick peek across the globe. Of course, you and I know we've got to start off and take a look at what's gone on around the world. Let's start off by taking a look at Asia last night. Talk about hitting the numbers that you and I have been talking about here for the last several weeks. If we take a look and start out with the Shanghai. If we look at the Shanghai, and I just happened to catch the end of John Logan's show. He kicks things off here. He's the maitre d' at the Hotel California. He gets to kick things off. If we take a look at the Shanghai, here's a daily chart for the Shanghai. What I want to show you is, if we take a look at where it really broke out, which is right here on the right-hand side of my chart. Right-hand side of my chart, right here, November 24th, we can say that it broke out. Take a look at the line. In fact, I'll just do this. I'll just make a line on my chart here. Just use the default, and we'll take a look at, basically, we'll go from right here. I thought I was going to use a line. Let me see if I can do that hocus pocus dominocus. There we go. Take a look at that blue line. What the Shanghai was doing for 3 years. This takes us back to, we'll just say, August of 2011. We saw a breakout here November of 2014. So for a long period of time, as Tom likes to say, the Shanghai was just building cause. Whereas our markets, right, all up at at all-time highs, things of that sort. So the Shanghai just simply was building cause, and then boom, big move up to the upside here. As you know, one of our price targets inside the Shanghai, let's go take a look at it, has been the 46.42 level. The actual intra-session high last last night was 46.10. 46.10 versus 46.42. That's pretty darn close. Now, you're going to want to watch that 46.42. There's nothing that indicates that the Shanghai wants to move lower. And so if, in fact, let's put this on a little bit longer term chart out here. So that move that we've been looking at, that little skyrocket after building all that cause, says if it gets above 46.42, your expectation should be that it's going to move to the 0.786 level, 54.28. And if we take a look at A to B equals CD patterns, they're huge out here. Let's just go take a look at it. Here's the weekly chart. Your A point's going to be down in June of 2013. Come on, baby, work with me. What's the deal here? There we go. There's our A point. Your B point is somewhere up here. Looks like right around the January time frame of this year. There we go. And then just a shallow retracement into the early part of February. The 1-to-1 A to B equals CD gives you a price projection of 48.2693. But look, I'm a master of disaster sometimes, but a master of these lightning bolt patterns. And what I can tell you, and it's all about being able to manage that C to D leg. I can tell you that right now, the message here as we speak right now is that this is going to move up to 52.71 at a minimum. That brings that 54.28 area, that 0.786. Now, it may not happen overnight. Of course, we have seen basically things happen not overnight, but certainly since the July, August, September, November timeframe in 2014, just simply huge moves up. And everything as we speak right now at 9:12 a.m. on April the 22nd, all signs point to that continuing. Now, let's go take a look at what's going on here in the Hang Seng. Hang Seng up 83 points, about a third of a percent last night. Let's take a look at the daily chart out here. And we can see that this from an A to B equals CD pattern. It completed the 1 to 1.618, but it wants to go make at least that 1 to 2 move. It can go beyond 1 to 2, but that 1 to 2 move will take you up into the 28,821 level. Closed last night at 27,933. No real resistance in play here. Maybe if we go back longer term, maybe there's some resistance. Let's take a look at a monthly chart here real quickly. Nah, not really. I mean, it got over a monthly B point. That was back in November 2010. That gives you that price projection, quite frankly, of 30,482 on the longer term chart for the Hang Seng out there. So that is where she is headed to. If we go take a look at the Nikkei last night, the Nikkei up 224 points, getting above that 20,000 mark. That really was not a big deal for it. We take a look at its A to B equals, well, we just take a look at where it's headed to. The resistance level inside of the Nikkei, I'm just leaving the monthly chart back up on my screen. It's really right back here. That takes you back to March of 2000. That's its next target area. That's 20,809. If it gets above that, then let's take a look at it. Where are things headed to? If it gets above that, let's just take a look at retracement levels here from the high that's back in 1990 all the way down to the lows out here back in 2008. You can see it's actually above the 0.382 retracement. So the Nikkei needs to clear 20,809. Then the next level hurdle is going to be 22,750, and then it'll be on and upwards into the 26,935 level. There is nothing that indicates to you or I, there's nothing at least on the stock chart that suggests that it's going to do anything but that. Again, not necessarily a one-way move to the upside, but that is its longer-term objective. And when we understand the longer-term objective, that's where it makes it a little bit easier to buy the dip, so to speak. Now, let's go take a look at our markets out here. I know I skipped over Europe, but let's go take a look at our markets. We can come back to Europe and see what they're doing. I just want to take a look at the Dow futures. Now, we've seen quite a bit of movement. Of course, we've seen a lot of movement over the past we've really over the last 4 months now, almost nearly 4 months. But just take a look at from the high yesterday inside the Dow futures, they got up to 18,072. Somebody do the math for me. Got down to a low this morning of 17,774. That's 250. That's about, what, 300 and some odd points out there. Even this morning, the low out here was 17,774. You are at 17,911. You know, what is that? That's 140 points or so. So when I say to you that when we take a look at the markets, that the Dow futures are only up, 28 points, that really doesn't tell the full story, does it? Now, what does that mean? What does that mean? Well, you know, if we go take a look at, let's look at our 4 time frames here for the ES Mini. I don't mean to be jumping around here, but really the markets are all doing something in unison out here. We could go back to the Dow. In fact, let's do that. Let's go back to the Dow futures. Let's not do any jumping out here. Let me see here if I can do this. I'm going to try to expand it up. Just we're looking at the daily chart. So just out of curiosity, I haven't done this. So we're going to go from the low that came in here, and that is down on April the 17th, all the way to the high that was in yesterday. And basically, it's made about a 0.786 retracement as it made its way back to those lows this morning. Now, why is that important? Well, there is a possibility, slight possibility, that and that's if it can take out its highs. That high that you'd be looking at right now would be the high here from yesterday. So that key level to be watching is 18,072. If the Dow futures are able to do that, what that's going to set up is an actual A to B equals CD to the upside. That A to B equals CD price projection, that would give us a price projection of 18,180. Not out of the question. We'll see. If we take a look at the summation index here for the Dow yesterday, dipping just slightly below the zero line. So it's really on the zero line. Look, my reading is minus 0.02. That's not enough to float my skirt. Maybe it's enough to float your skirt, but it's not enough to float mine. That's not exactly a lot of conviction for the sellers out there. If anything, it's a little bit more leaning towards the bulls inside of the market when we take a look at what the Dow is doing. Look, I cannot control what the market is going to do here in the next moment. But what we can do is we can go take a look at past patterns, see what information the market is giving to us, and then go ahead and act from there. And that's why we began by taking a look at, hey, what's going on across the world out here? Apparently it was Europe that did not get the message with regard to what was going on in Asia last night. Let's go quickly check in on Europe and see what we've got. If we take a look at the DAX, it's up 19 points. Really not that big of a deal. Let's put this back on the daily time frame out here inside of the DAX. If we take a look at it, and see what it's done here today. It's well off its session lows as well. It had gotten down earlier this morning down to about 11,787. It's trading at 11,922. So 787, 877. So you're about, what's that, 140 points or so already. Movement off of the bottom inside of the DAX. DAX here wants to make a move up into the 12,695-ish type level. Let's go take a look at the FTSE. No damage there. In fact, the FTSE here is kind of saying, hey, I like this new elevation. I like being above the 1999 highs out there of 69.50. Did trade lower, just a bit lower here. It's just kind of enjoying the view before it gets ready to take off, hit its next level, 71.36, and then 72.37. A quick peek in on that ES Mini here. That's what I originally had up on my chart. If we take a look at, let's look at the 300-minute chart out here. If we take a look at the 300-minute chart from low to high, the most recent low to high, what we're going to see is basically nearly an exact 0.618 retracement. Probably was. I just grabbed the wrong area. The low being the 2064 level back on April the 17th, and the high being yesterday's high. Well, I guess it was midnight's high. Was that midnight? Yeah, it looks like midnight April 21st. 0.618 retracement, potentially an A to B equals CD to the upside setting up here. Steve Rhodes with TFNN. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 35, S&P up 4.5, composite up 12 points. Let's take a look at what's moving here in the pre-market this morning. To the upside, you've got Azimul Holdings, ASML is a ticker symbol, closed at 97.75. They're trading out at 109.21. I don't see what the, not an earnings issue, but some other type of agreement for a minimum of something. In any event, it's trading to the upside. AEC, Associated Estates Realty, that closed at 24.48. That's up a nice $4. That's trading out at 28.56 out here. Brookfield affiliated to acquire this entity. Tesla, how about Tesla? It's not, let's see, it closed at 209. It's trading out at 212. Out here, Yum Brands, they were out with the earnings. YUM is a ticker symbol. They closed at 80.85, trading out at 83.79. McDonald's out with numbers. MCD is a ticker symbol, closed at 94.87, trading out at 97 bucks right now. Let's take a quick peek at McDonald's. So trading right around 97. Let's go see where that is trading into. So 97 is going to get you back inside. Looks like right around yesterday's market profile. You know, you've got a new one that formed here today, but we'll go with the longer one. We'll go with yesterday. So if it can close above that, that looks like 97.38. what McDonald's does is makes a run for the high. Now, all the McDonald's, I think we looked at this yesterday or the day before, all the McDonald's is really doing is coming back to the area where it had most recently broken out. McDonald's has a couple of breakouts. I'm sure if I go back further left on the chart, I'll see some breakdowns. But right now, most recently, what it's done here in 2015, we saw McDonald's gap up on January 29th. Wide price spread, accelerated volume, 19 million shares to the upside. Then we saw a follow-through on that. Now, that follow-through took several weeks. It took until February 25th in order for that to occur. But a second day of wide price spread accelerated volume. And that really began your area for McDonald's to have pulled back by coming back to the breakout area would be somewhere between 93.69 and 94.86. I like to always use the day before the actual high volume day, or actually a swing point, which would have taken us back into the February 20th level. And that gives you your range as far as what it is that you're looking for. And if you're looking to enter into a trade, knowing that range is really all that you need. And then with regard to your stops, you're not going to use a stop that's too tight out there, because you do not want to be right on the trade and wrong on the stop out there. That's why you want to make sure that you understand the average true range, the average daily volatility of anything it is that you trade, because that is nothing more than a normal breathing pattern out here. And in the case of McDonald's, that would help you in aiding yourself inside of this trade. So it does look like McDonald's is going to try to get back up to its highs out here. And look, if this area here were to fail 93.69-ish or so, it's got that other sign of strength right back down here from January 28th, January 29th. But at this stage, doesn't look like that is the target. Now, United Rentals, a different story out here. United Rentals, they were out with numbers, revenues of $1.3 billion versus 1.18, so they grew the top line. Net income, sheesh Louise. Net income for United Rentals. People are renting a lot from United Rentals out there. 115 million versus 60. That's a double. It's 100%, nearly 100% increase in their bottom line. Nice going to their staff, their crew, their cut, paste, and assemble, their CPA staff out there, because that's a, you didn't double revenues, but they certainly soaked out of, I don't know what's on it. You got to go and read the financial statements, which is a fun thing to do. Just go and take a look at the MD&A, the Management Discussion Analysis, and that'll give you some kind of feel for what the story is that they are providing to you. But let's go take a look at United Rentals, because no matter what those results are, it's trading out at $94. So what is $94 going to do for United Rentals? We can see this thing here has been in a decided downtrend out here. So even though they're knocking it out of the park, shareholders, who are the ultimate arbiters of price out there, right? They're the ones that tell you the most fundamental aspect of what's going on inside of a stock out here. $94 is going to take us to where? 94, not really a ton of damage out here, although it will gap down, so it'll be dependent upon the volume. In the case of United Rentals, looks like it's got some fairly decent support down here in the 86.55-ish area if things, in fact, decide to get out of control. Some fairly large selling going on inside of URI. That was most recently back here in January 5th and January 6th. We saw a volume of 6.7, 5.6 million shares. So it's an area of supply that it's got to deal with in order to try to move higher. This morning, it ain't moving higher, at least not right at the open. Natural Resource Partners, NRP, not to be confused with NLP out there, but NRP closed at 692. It's trading at 607. GlaxoSmithKline, GSX, it closed at 47.25. It's trading at 46.63 out there. The only headwind that I can see at this moment here for the market's moving higher, we had a euro yen that was moving higher earlier. It's pulled back just a bit, but just a little bit of headwind. You may want to go ahead and put your seatbelts on. If I'd given Al enough time, we could have rang that fasten your seatbelt sign out there, but maybe we'll do that after the market opens. This is Steve Rhodes with TFNN. I'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 37 points, trading out at 17,985. S&P is up 4, trading at 2,100 and about 2,101. Composite up 11, trading at 5,024. Russell 2,000 up 70 cents. She's trading at 12.64. The DAX back 38. The FTSE's off 42. Goldilocks off $7. Silver down 10 pennies. Let's go check in on those hard metals out here. Let's take a look at gold. What's the number to be watching for gold today? It's going to be 1189.20, and he closed below 1189.20. We'll see 1179. Of course, you may say, boy, that's a real stretch, isn't it, Steve-O? 1189 to 1179, $10. Look, what it says is that if you get a close below 1189.20 as we speak right now, it's not a good sign out there. Gold should not close below that. Testing, no problem. What we showed yesterday in gold, we showed how this, how it's so unusual that over the period of the past couple of weeks now, that we've seen basically a $10 range inside gold. That's what Stevie likes to call the hold, bam. And that's typically what gold will do that from time to time. How a group of traders is able to keep their thumb on that price, they just simply are. Look, anything is possible. What I do know is it's a pattern that I have seen before when you see just those, and it's really by just taking a look at the closes. So it almost makes it visually easier to just go ahead and put when I put the line chart out there, because the line chart is only looking at the closed sessions out there. But what typically happens, and both you and I wish I have said this, and I'll say it till I'm blue in the face, and then eventually maybe red in the face, or maybe green in the face, who knows what. But I'll say this again. At this stage here, the evidence supports that gold, the BAM, is going to be BAM to the upside out there. What's going to cause it, I don't know. But certainly it's being held in place. There's going to be a big move. That much I believe, and it's almost a toss-up between to the upside or to the downside out here. So it's not for the faint of heart. You would have loved to have seen gold hold that rising price channel. It didn't. It's just moving sideways out here now. That's really the pattern that is more prevalent and more important, in my opinion. It is because we haven't exactly seen a breakout to the downside once that rising price channel. So now it's that sideways. It's that thumb on the pressure gauge out there. It is the fasten seatbelt sign when it comes to gold, because you do want to fasten your seatbelts, because there is going to be some turbulence that occurs in trading the shiny metals out there. There we go. If we go take a look at silver, go see what Hi-Ho Silver is doing as we speak right now. You got silver off 9 cents, trading down at about $15.92. In the case of silver, no reason for it to not go down and at least complete the 0.786 retracement, the 1 to 1.618, A to B equals CD to the downside, and a test of its swing point out here, and that's from March 11th. Maybe that's what Goldilocks is waiting for, just simply waiting for silver to go test that swing point, the high of that March 11th swing point. Again, that price point is $15.73 out there. No bullish signs yet inside of the silver metal out there. If we take a look at light sweet crude, back 13 cents right now, trade out at 56.48. A quick peek in on light sweet crude, not really doing a whole lot. This has it certainly does have a bit of a rising price channel. Let's go take a look at that. Let's go draw that into the picture out here. We're going to start with the body of the candle for March 18th, and we're going to look for at least 3 touch points if we can find them out there. I think that's really that really does it for me. I don't know about for you, but that looks like the rising price channel right now inside of a light sweet crude. So now we'll just go ahead and we'll pull this pattern here back a little bit lower. Now I say that this looks like because the bottoms here we've got you've got basically 3 touch points. That's good enough for me. So if light sweet crude, I guess they're out with some inventory at about 10:30. Thanks for that information, Jay. Any pullback you want to see, can light sweet crude go ahead and hold the bottom of that rising price channel, which also happens to fit right with the bottom of the current new market profile out here at $55.30. So that could be a springboard for the move up to the top of that price channel out here. Maybe that's in the $60-ish area. That's what's going on with black tea Texas gold out there, light sweet crude. If we go take a look at some of these stocks here that are moving and grooving in the marketplace, hey, on fire this morning, fire sale that is. Chipotle Mexican Grill down $37, was down 40 or so earlier. Now Chipotle, let's pull this back here. So gapping down, volume so far 420,000 shares out here. It's running right into, it's tested its most recent swing point out here. That was April Fool's Day. That only had 400,000 shares. The top of that swing is 653.02. You're at 655 as we speak right now. This had a little bit of a breakout recently. It's really a consolidation pattern here. You've got all these gaps up and gaps down, decent volume behind the move. It really looks like Chipotle is just simply in this consolidation. That consolidation, in essence, being about right around this level, this box. This is not Jack in the Box that we're looking at, but this is price in the box out here for Chipotle. Unless it breaks through the bottom, and the bottom here, meaning the price point is 632 to 632.43 to be exact. It looks like this is just kind of, now it's a nice pattern out here, because you're going from 630 to anywhere as high as 727. Let's put a little bit longer term chart out there. Let's go see what a monthly chart for Chipotle, see if there's any any damage out there. There's our price in a box out here. You did have big old bearish engulfing candle session here the month of February. A little bit of follow through last month, volume wise. If anything ever does get out of hand in Chipotle, the October lows is where it would fall to. I saw somebody write, it is hard to imagine. I've eaten at Chipotle now a handful of times out there. And I don't think the food is really that great. But I guess it's all relative, right? What is it that you're comparing it to? And look, does it really matter? Sometimes people talk about fundamentals, right? And so there's different kinds of fundamentals. You have the fundamentals of the product. What do people think about it? Do you like it? Do you not like it? Do you see people buying it? And it's clearly in Chipotle, I mean, it's very difficult to go in there and not see a line, right? So if you've ever tried to go there around lunchtime or dinner time, there's a line, or even late, there's a line. So that's a beautiful thing. Then you have to go take a look at fundamentals, what's going on with regard to, inside their MD&A, inside their financial statements, what's the financial condition of the company. And then you ultimately have the fundamentals of what our stock trader's doing. To me, that fundamental, the latter fundamental, is one that's most important. Then you can kind of go back and but they're all fundamental aspects, even though we call this technical trading. We're just simply utilizing tools here that help us to identify what price is likely to do just based upon understanding the patterns that exist inside the marketplace. It's really the same way that you and I live each day. And many times we do that, and it's kind of like this invisible hand that we have inside us. Each of us are making decisions all of the time. And some of us are making decisions out of fear. Some of us are making decisions out of strength, right? Weakness, and that's really some of the areas that I've done a number of workshops. I've loved doing each of them. I love doing and providing you with more information, being able to link the known to the unknown, being able to do that in a very short period of time, just being able to share with you unique tools that you will be able to use for a lifetime. To me, that's really what it's all about. If you're not giving, you're not living, right? And so that's what I know that each of the hosts do here during their workshops. Basil's got an upcoming workshop next week. He's going to be giving. He's living out there because he's giving. Each of us do that. But look, I'm going to do what ultimately will be my favorite workshop. And for those of you that attend those workshops, and there's thousands of you out there that have attended those workshops, and thank you very much for doing that. Everybody that I've heard from, has had an extraordinarily positive experience and has learned just a tremendous amount. I've got a workshop coming up. It is May 7th and 14th. It's split up into 2 Thursdays. You don't have to be present to win. You don't have to be there. It's going to be archived. It'll be on your members page, and you always have access to me with questions and so forth. So it's going to be from 6:30 to 7:15. So 2 45-minute sessions, very easy to sit through. But this one's going to be dealing with the psychology of trading, the psychology of life. It doesn't matter whether you're a trader or investor. You can still attend. You'll still want to attend this because these are going to be tools that are going to help you to be able to look. If you're doing well, this is going to help you to do even better. If you're not doing well, whatever it is that you're dealing with in life, I'm going to teach you how you can do well out there. It's really, what leaders do is that's what they do. Leaders find ways to elevate everyone out there. And of course, we take a look at leadership in the stock market. So anyways, do me a favor. Just go check it out. Go to the homepage of TFNN.com. Over on the little carousel, we call it, that little thing up and down that moves up and down. You've got the workshop. If you're a newsletter subscriber, you're automatically in. You don't have to be a newsletter subscriber to go, because we really wanted to open this up to the wider swath of folks out there. We recognize that a significant portion of the people that are listening in on the show, trading, investing, they're managing their longer term funds out there. And so you just listen in for the entertainment. This is a workshop for you. It's only $97. I mean, it's less than $100. Just go add up all the things that you spend money on during a week, and this one is going to be a set of tools for a lifetime that you'll be able to use for yourself, your coworkers, your spouses, your family members out there. Anyways, enough about that. Right now we got a flat market here. Dow is flat, S&P is flat, the composite is flat, Russell 2000 is back about $1.60 out here right now. We did check in on Chipotle. Let's go take a look at a couple of other things here that are moving stock-wise. Let's go take a look at Illumina Inc. ILMN. Their first quarter profit looks like it topped estimates. Nonetheless, it is trading to the downside here this morning. So let's go see what is in store for alumina. Now, this thing here has simply been consolidating ever since its last sign of strength out here. That last sign of strength, that took place inside of this equity back here on the trading day of October 21st. You've still got an open gap up there. Is it going to be filled? I don't know. We've only seen one test of that gap, and that was back on the trading day of December 16th. That was 1.2 million shares. Oops. No, don't do that. That was 1.2 million shares going after that gap of 3.6. Nowhere near the type of volume to move to the downside. In fact, you had a nice little bullish engulfing session that followed on December 17th. Made a high out here recently back on January 28th. Did that with 2.2 million shares out here. Let me pull this back. Looks like that's its all-time high in the case of Illumina. Nothing really looks that bad here inside of this equity. In fact, yesterday had some fairly decent volume. Just kind of like our markets in this consolidating type pattern out here. 174.01 should be support for alumina. If that fails, then it comes back to the breakout area, the bottom of the gap at 166 even Steven. And that is ticker symbol ILMN. If we go take a look at Tupperware, that's trading to the downside. TUP is a ticker symbol. That's off $4 as we speak right now, down 6%. Tupperware is also coming back to a sign of strength, a gap out here. Let's go check out its gaps. That's being the trading low from the day of January 28th. That's wide price spread for sure. That was accelerated volume. That's at 64.97. The top of the gap is the trading session a day earlier, and that's at $60.41 out there. So if, in fact, Tupperware can close below 64.97, and do well. If it does with light volume would be less than 3.2 million shares. So far, it's traded with 244,000 shares out there. If it can do with light volume, then what? Well, Tupperware's got a couple of issues here. It's got a few ceiling lids out here because there's another supply line when Tupperware had gapped down. It gapped down. Looks like this was an earnings date as well. That was back on the trading day of July 24th out there. 78.50 is another area of supply out here. So you've got an area of support and you've got an area of supply inside of Tupperware. Hey, let's go out to New York to Maria. Maria, thanks for calling. Thanks for holding. How are you this morning?
Thank you very much. I'm good, and you?
Excellent. Thanks so much for asking. You wanted to look at the DAX. Tell me what you're looking at, how I can help you.
Yeah, voilà. Alors, I'm looking at the DAX because I had this thing that I was putting on the charts, on the 240-minute chart for the DAX, and I had from the high on April, I think 13th, to the low on April 17th, and back up was a 60% retracement. So I see an ABCD down with a target at 11,350 on the future, but it seems that you are pretty bullish on the DAX. So I was wondering if you can explain to me what I'm doing wrong.
Well, right now you're not doing anything wrong. What you don't have necessarily is, let's say, a confirmed A to B equals CD pattern. So if we go take a look, let's look at the DAX. I'll put that on my screen out here for you. And so there's not anything that you're doing wrong. You're looking at a potential pattern that could be unfolding. And if we take a look at that A to B equals CD, just so that people can follow along with us, what Maria has done here, folks, is she's taken the high. Let's see, it was April 10th, I believe. April the 13th. Yeah, April 13th. Yep. So that's what she's using as her A point. She's using as the B point down here, April 17th. And at this stage, the piece of information we have would be yesterday's high, could be the C point of an A to B equals CD to the downside. Now, ultimately, and I thought I might have mentioned this yesterday. Ultimately, Maria, we would love to see that pattern unfold. And we won't know whether it will or not unless it takes out that B point. I don't have any volume for the index, so I can't tell you from a volume standpoint, what did it do last night. But as long as it does close today inside of 12,019, can you stay on through this break here?
Yes, I can.
Okay, so we'll go back out to Maria. We'll go take a look at the DAX and try to understand what it may be doing, both to the upside as well as to the downside. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 19, S&P is down 1. We're going back up to New York to Maria, and we're looking at the DAX. And as Maria, are you short when you're looking at the ABCD pattern? Tell me what you're doing with that.
Yes, basically I shorted on the 61% retracement from the move down, and I'm trying to see if it's going to break the B point. And in this case, my target will be the right one. But otherwise, what I'll do is that I'll see if it at least retests the lows of Friday.
Yes.
which should happen eventually, right? Because technically, I mean, the ES has been going down with volume, so I think probably the DAX is going to follow in a friendly manner.
Well, if we trade just to stay within inside the DAX with regard to the trade, though, and so what you need to, so I will say this: as long as it closes, the DAX closes underneath 12,019.75, then whether it's with volume or not, likely it will go down and test that low of 11,674.59. But that's what you need to see it bust through in order for there to be an A to B equal CD to the downside that would take you to 11,365. Now, what I will tell you is the highs that we saw last week inside the DAX are up against a pretty significant level of resistance. If we take a look at the longer-term chart, now this is a monthly chart here for the DAX, and this tool here takes a look at the horizontal trading range boundary lines. The solid lines going across my screen, those are significant areas of support or resistance. So at 12,465, that happens to be your significant level of resistance inside of the DAX. So taking the short from that high, in this case here, you chose the 0.618 retracement level. That's good. That makes a lot of sense. Your stop, wherever it's going to be, probably somewhere above where you clearly above where you entered. But if you see the DAX get above 12,465, which I believe we will in time, that's going to go ahead and take it up to the 14,000 level. So over the longer haul, yes, I'm still, the chart is bullish on the DAX. So, Maria, we had a short segment there. My apologies, but thanks for staying on. You bet. Have a great day. Folks, stay tuned. Tom O'Brien, he'll be up next, giving you the market minute. And then Basil's going to go ahead and fill in for me during the second hour. So have a wonderful Wednesday, and I'll see you tomorrow morning. Take care, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.